Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market rundown. So as I talked about in the video yesterday, while we are in tightening ranges, volatility drops off, volume drops off, opportunity drops off. That means we need to slow down our trading. So I am waiting for clarity at this point. We have our low, high of the bounce, higher low. Looks like we may be setting a lower high here. If tomorrow we break 285.10, we'll call 286.93 our lower high. The most important support to me is 283.12. So my style of technical analysis, for those who haven't been watching long, I don't predict anything. I'm not here to predict. I'm not here to have a crystal ball. I'm here to react to price levels and trade based off of them. So if we see a bear break of 283.11, the odds that we're going to break 280 will increase. If oil breaks $60 support, the odds that 280 will break on SPY will increase due to correlations with oil. If we see SPY bulls break 286.93, the odds that we are going to hold a weekly uptrend will increase. So every little event that's going on with all these little moving pieces of the puzzle shift the odds of what's the most likely scenario. We also have to be watching what our major sectors are doing. Is our major tech sector, healthcare sector, and financial sector, are they losing key supports? Are they breaking key resistance? That's how we get individual little clues on what is most likely to happen. So where we stand on SPY, I'm just going to sit back, trade individual names. I traded oil, the oversold bounce today. We'll go over that in just a second. But I'm going to be watching Tesla for some nice volatility trading. But otherwise, names that are significantly correlated to the market, I'm just patiently waiting for this daily range to break. And it might take until next week to see that happen. So IWM on the daily time frame is also still in a tightening range. 151.16 is support. We have a higher low at 151.41. Looks like our lower high is set at 154.04. So 151.41 to 154.04 is the range that I'm watching with a bear break. That's going to shift the odds that other individual markets or individual sectors will break bearish as well. And if it breaks bullish, vice versa. QQQ, still very tight the last 3 days, waiting for clarity. We had another scenario today where we had a bearish reaction to headlines of Trump, China, the narrative that we've been seeing continually play out. We had a bearish reaction to that, and the SPY bulls started the day with some dip buying off of that news, but then it was just a whole bunch of choppy action as QQQ could not break the low of the day with any meaningful follow-through for the bears, and XLF could not break the high of the day for any meaningful follow-through for the bulls. So watching those two sectors let us know that we were likely to see a pretty choppy day. Looking at the financial sector today, we can clearly say that if 27.21 does not break, the bulls do not gain any momentum. If we break 27.21, it shifts the daily trend to a higher low and a higher high, and that would increase the odds that the SPY bulls can hold 280. So 27.21 is a key line in the sand for me as far as the financial sector is concerned. We're looking for XLF to give us a weekly higher low, and breaking that double top bullish would be the start of the bounce off of that new weekly higher low. XBI, still very tight, still a lack of clarity, still waiting patiently. Low, high of the bull move, higher low, and we're looking for potentially a lower high to be set. 83.38 is a double top, and we're watching if we pull back tomorrow and break the low of today, then 83.38 will be our new lower high. 80.71 is the most important short-term support, and just patiently waiting for clarity in the short term. XLV has certainly been favoring the bulls. The line in the sand here is 90.85. If 90.85 breaks for the bulls, the odds that SPY can hold 280 and keep the weekly uptrend are going to increase a good bit. So we've been watching XLV on the 2-day time frame for clarity, just to iron things out a little bit and smooth out that trend. Low of the dump, high of the bounce, higher low. If we can't break 90.85, it's a lower high. If we can break 90.85, it's a very clear shift in momentum back to the bulls that would only help the S&P 500 bulls remain strong. So if we get bear breaks on individual sectors, it has implications on the broader S&P 500, and we're going to get those answers real soon, I'd say within the next 3 or 4 days. VIX is following through with the bear flag. So a weak bounce, dropping to lower lows. Surprising to see it red today with SPY not really doing anything for the bulls. And SPY was red for the most part today. But anything on the daily now under 1760 is just a lower high, keeping the downtrend intact. And the next support after 1440, we're looking down towards the 1290 area. Oil dumped today. So this is what has me most cautious on the market as a whole. If oil drops down and breaks $60, it's a weekly lower high and lower low. And then we would have this monthly equilibrium that we've been keeping an eye on. And I'm screwing it up here. US oil. 1 month time frame. So if we break $60, we're then looking for a monthly higher low to form in the low $50 range and a tightening range to form probably into Q3, Q4. I'd say Q4 2019 is when we would look for a break of a monthly equilibrium. If that is indeed what ends up playing out, we have to break $60 first. It was a massive pullback today, heading down back towards support. Support is 60.63, and then we're looking down at 60.02. So if we are going to see the bears take over in the market, oil breaking $60 would be a first indication that that is a potential scenario. I ended up playing oil twice today, 2 trades for oversold bounces. The second one was the better one, and it was just looking for an inverse head and shoulders pattern. We had a bounce to 61.40, so 61.40 is our new lower high on the 5-minute time frame. We then dropped to a lower low. We saw another bounce start to take place, and someone in the chat room asked me, is this a good bounce to get in on? I liked the increasing bull volume, but I looked and said, it's unlikely this bull move is going to break 61.40. It's likely we're just going to give a lower high. So if we're going to change this trend on the 5-minute time frame, it's probably going to be an inverse head and shoulders pattern. And that setup is when you have the left shoulder, the head is the new low of the day, the inability to break resistance is the right shoulder. I entered on this consolidation with a stop loss below the low of the day, essentially a bottom fishing play, and ended up with some really nice follow through on that bounce. And that ended up being a little bit of a day maker. I was trading UWT, the 3 times leveraged ETF. So you look at this and say, big whoop, it was only a 50-cent bounce. But on UWT, it was a multiple percent bounce that gave some decent opportunity. And I knew we were just looking for an hourly lower high to be set on the oversold bounce. So I scaled out fairly quickly into that strength, exited half, let it run a little bit longer, exited the second half of that position. So I love oversold bounce plays, which is why I'm interested in Tesla as it gets weaker and weaker. But oil $60, very key level. So far we've established that XLF 27.21, very key level. XLV 90.85, very key level. Oil $60, very key level. If I were a trader, as I am, and I wasn't doing this every day, all day, and it's burned into my brain, I'd be writing it down on a piece of paper next to my computer what all these key levels are that can sway the percentage chances of what is most likely to happen in the market from where we stand right now. Natural gas bear break today following through, losing the daily uptrend. So losing the daily uptrend means our weekly lower high has been established, 2894. We certainly were not expecting to break that level on the initial attempt. Our weekly lower high is now 2688. And the question is, can the bulls hold 2442 to form a weekly higher low? Or are we just going to drop down and continue this weekly downtrend? So we got real beat up here. And if there's anything about natural gas, if you've been watching it, one thing that you can certainly say is that the RSI levels can get very extended, more so than anything else that I have really looked at to trade. Remember that massive bull run and then the massive sell-off? We've seen RSI levels get extreme. So just be cautious if you are using RSI levels to base your trades off of on natural gas. If I'm using RSI levels for trades, which I do all the time, it's because I can look back at the previous price action and the history and see, okay, RSI levels have been respected. We've bounced off this period before. This is the lowest the RSI has ever gotten on the 4-hour time frame, and I have a reference point. But for natural gas, there is no reference point because these RSI levels have been all over the place very often in its history. So overall, market is tight. I'm sitting on my hands patiently waiting. I'm trading less when this is the kind of environment that we are in. And how we break heading into next week, if we do break before next week, is going to give us little clues. Do we break tech sector support? Do we break financial sector resistance? Does oil lose key support? All of these little pieces give us the big picture of what to expect in the short term and what is the most likely scenario. Hope you're well. I got no end of the day video content here. We'll do some praying mantis stuff tomorrow. But I hope you're well, and we'll see you tomorrow. Have a good rest of your day.